Good afternoon, Scott Redler, T3 Live. I'm just going to do a quick mid-afternoon recap because I'm not going to be here for the close. I'm going to be trading it from short hills, but I will be on the VTF for the last hour. Just wanted to do a quick update. Came into the morning call not really knowing what to expect, except risk down made sense after yesterday's close, after the volatility in Asia, the weakening of the European indices. So thank goodness a lot of people came in with risk off. Some people short. I actually was just flat equities. So the question is, what type of move are we going to have today? Were we going to hold the bottom end of the range and rally back? Or would we see some weakening in the key names or the go-to names that have been holding up? And how would they treat the banks and what happens with oil? All clues to give us whether or not we see, a gap down and then a close on the lows, or a gap down, find the low and retrace up, or not. So a normal day or one of those crazy down days that, could lead to more macro arena areas to test. So anyway, take a quick look at the spiders here. We are live. It is just 11:45 right now, so this is where we are. This was that inside wedge that we were talking about, for quite some time, where, here, this descending channel, the market was pretty much rejected every time we got there. And then here, pretty much the bulls made their stand quite a few times here with that red dog reversal on that Wednesday. And then, the quick push up to then basically fall out of the range. So, you had a few quick, spots to navigate today if you happen to be long. It wasn't the easiest, but as of right now, this is where we're at. So you do have this small point of reference here. You have that Wednesday low of 205.36. We basically held right around it. So this is your pivot to trade against. If you think we're going to rally and you think we're going to come back above the 200-day, all you're doing is thinking. This is your points of reference to be long against. Why not? Risk reward. You're probably like, oh, earlier in the week or yesterday we were around 210. Why not try it here? You could try it. Use a 40-cent stop. Okay, and then we'll see if we reclaim the 200-day or not. And then overall, if we stay weak and we don't rally back above, just say this 206 area, the 206.60-ish area, chances are we're going to be testing this macro support, which comes in a little closer to 204. Which I'd much rather do. Coming off this low here, just pretty much puts off the inevitable of a bigger move lower. And I think a lot of us would love this trade to change because this overall 6-month channel has just been getting long in the tooth. If you look on Twitter, you'll see I also posted the bigger, longer term chart. So you go back to this real quickly and just take a quick look at the 5-minute. You have this recent rally back where we actually, shorted this rally. Now, you could almost see a descending little channel here where if it were to get above this little spot, perhaps you get some kind of, push up for an active trade to the long side, and then you'll see whether or not, the sellers keep control here and don't let this gap get filled. So as of right now, you have a small double bottom, it's holding in here, so you'll see what's next. That's on the micro. On the macro, lots of things, seem broken, and it seems as if they would like to take this below it, but they're only going to be able to do that if something's happened. Something's happening, meaning high beta tech remains weak. Oil actually found a little bit of a low. It didn't break 40 like everyone was saying, so that's going to maybe keep some things from falling apart. In the banks first, I talked about Goldman. Would Goldman hold the 200-day, and put in a double bottom? If so, it might be able to bounce, and as of right now, Goldman has a small double bottom to look against. And obviously this descending channel here is long in nature, but as of right now it didn't make new lows, so that's something keeping the market up. Apple, let's go to tech. Still weak. We talked about if it would break this 114, which it did, the next level would be down near the 112.10 and kind of trying to hold that. And then here's that other low. Obviously got very weak when it broke and fell out of this channel. So as of right now, we'll see what Apple does. Apple right now is, off the lows. You take a 5-minute chart here, and it's not really doing much, not leading, but I guess you could draw something like this too if it wants to retrace up a little bit. This was that last reflex move. You're going to probably need Apple to stay below this 113 if you want real downside follow through. As of right now, it's just a kind of reversed yesterday. Some guys got short, into this, and now it's been weak. This was weaker earlier. It gave you some clues when this 114 broke and couldn't get back above it that market was going to get hit a little bit more. So we'll see what type of close it happens here. Close like this, and all of a sudden, it's going to keep some of that weakness on in tech. The Qs, broke below that upper area which we were talking about, didn't hold this spot, and now it's below that Wednesday low, which so that's showing a little catch up because I just showed you the spiders aren't below that low. This is, so, but it's still above the 200-day. So at this point, see if it could reclaim this 108.22 spot and close above it or not. If you want to be long, what you do is at a spot like this is what I would do. If I was thinking that we rally back up and I wanted to have some exposure, I would buy versus the 90-minute low or the morning low. And if you have a defined stop, and then if we happen to rally, you make good money and you get involved. If we happen to not rally and something changes and we actually close on our lows and we see more downside, like what's happened in the DAX in Europe or in Asia, at least you know where to get out. So always getting out is good. We talked about this morning, high beta tech, what's going to happen here? Can some of them go green, or is the market going to get weak enough that they play catch up to the downside where, be careful or maybe even get short? Netflix was a great example. Remember this upper range right here? Boom. I was like, if the market's any good and they're going to just rally these things, chances are, it's going to hold this 118. If it were to break 118, get out of the way. And it broke 118, and now it's at actually a decent level here. See what happens there. I personally think that some of these high beta names could maybe retest a 50-day now. Okay, at this point, this upper wedge was resolved to the downside. Remember that small red dog reversal? That was your first sign around 126. So now we'll see what happens here. Right now it looks like it's trying to rally off the low. Whatever. We'll see what happens here. If this is going to, the sellers want to stay in control, they probably don't let, Netflix get back above 115, 116, and then perhaps you get to see, this moving average at some point, considering look how far it came from. Amazon and Google not really doing much, not much to talk about. There's, oh, actually look at that. Amazon actually broke that little spot. So, again, where the money's been hiding, it's not. And here's the 21-day where it held last time. So, an interesting spot to see if it holds. So, watch that. If that doesn't, you'll see this. And if they start to close these things in the gaps, you're going to see, more downside. But all in all, as you can see from all these, go-to names, where money's been hiding, some of the, the pickles are getting out of the pickle jar. So again, that's why you have plan A, B, and C. Do they hold higher? If not, maybe you get shorted or you just get out of the way. Facebook, same thing. If you think about my morning call, what number I said? Facebook has to hold 94 to be good. What did Facebook do? Didn't hold 94, and boom. Okay, so hopefully you get out of the way when it broke this area here. Okay, this was your upper area. Now, who knows? Okay, it could come back and test this low, or it could test a 50-day where most indices are below the 200-day. So you stay with momentum when they're above the 8 and 21-day. If they break, you get out of the way. So hopefully some of you got out of the way. Some guys actually made a little bit of money short this when it broke this key spot. So now it's in the bottom end of the range. I don't know, if it's going to continue, but at this point, that's your point of reference. So all 4 or 5 of those high beta names or the go-to names have broken their 8 and 21-day or something or near it. So, those could see the 50-day, especially if we're going to get some more downside follow-through in the key indices. The IBB, it's struggling to hold on to this spot right here. What's it called? I don't know if it's today. I don't know if it'll be soon. But if it, gets and closes below that head and shoulders pattern, could see that 340. And that would be a probably a good trade for some if you're looking for it. This changed when it broke the 200-day right there. So, if you want to be short, maybe be short versus 365, or you could wait for it to potentially press. IWM, very weak. It's a little bit off the lows. False breakout here, lower high, below the 200-day. At this point, it's just a little oversold. Guys were asking me where the oscillator is. The oscillator is minus 50. So, minus 50, we are in that oversold zone where it's hard to short, but you have to buy very carefully. That's why I say if you're going to be long now, you long versus the morning low, and that's it. You break the morning low, you're out of the way. I'm hoping that we don't get that bounce because, I'd love to see a little bit more of a washout, a little bit more of a panic, a little bit more downside, so it changes the trade, creates more volatility, maybe get some interest back in this market versus just trying to time when a corporate buyback's going to be in the time of day and what the robots are doing. A decent correction would probably bring some regular people back into the market, and then you could make money both ways versus just the misdirectional range type trade that we've had. So anyway, let's take a look one more time at the SPX. So overall, still hanging around there, a little bit off the lows. Here's your lower end of the range, this is when you could have got out of the way. You could have cheated once. Remember, I said 2,095. If it breaks that spot, get out. Well, if you got out, great, and if you got short on this, you got paid today. If you're just waiting now, at least you're not caught. If you look at I posted this chart, the weekly chart on Twitter of the SPX. Let's go there, and you can see that it's a pretty crucial spot. Okay, coming in here, where you have this is the rally from here. You could draw this trend line, and we're coming right into it. So, you could be in the camp that this is a sideways correction, and it might be, and it can continue. But if this overall rounding type top doesn't find support here at 2040-ish, this could happen fast, where you see 1980, which would only be about a 7% correction from the high, or potentially, this spot, which is lower. So overall, important spot based on the trend. You go back to the daily, important spot just on the action that we've seen. And at this point, stay tactical. We're below every moving average. We're below the 200-day right now, and there's no reason to have excess risk. Take trades. Try and embrace the volatility versus being caught in it. Guys are like, good call on Mobley yesterday getting out. Well, I'm glad you have rules, because that's our rules. Look, up here, you had a nice breakout in Mobley, right? MBLY, great breakout. Morgan Stanley, whether Fugazi or not, they put an $80 price target. Next day, you had a little inside day. Okay, it was, I'm still long it. I said I'll give it to make sure it doesn't, lose momentum. Losing momentum to me was below 62. So on yesterday's move, I got out. And it was, I tweeted around 3 o'clock saying, if you've been riding this thing since it's been above the 8 and 21 days, since about 48, this is your time to, trim some or get out of some. And everyone's like, oh, I thought you said it was going to 80. I'm like, it might, but you might not want to sit through what could happen next. And, so far that happened next. So you could always save money. You could always revisit. Markets trade real time, so can you. 8 and 21 day was the trend, and it changed. So that's what you do. You change. Just so you know, 11:57, midday call. I have to leave and head back to New Jersey. I'm going to trade from Short Hills. I'm going to be on the virtual trade floor there. I'm not in anything right now. I came in basically flat equities, did some longs, some shorts today. Some things worked out, some flattish. And at this point, I'm going to let things work themselves through. Maybe we'll do something towards the end of the day. And once again, if you want the Dow to be down 300 points, the banks have to get some weakness. Oil might have to get weaker again versus stabilizing. And then these high beta tech stocks that, where the money was trapped there, that lost some upper levels, need to continue to get weaker and go towards the 50-day. Just remember, it's August 20th. There's not a lot of big boys around, and to continue to break these lower, you're going to need some, some big volume. And then if you look at Europe, Europe is like really oversold. First of all, boom. Look what happens when you broke your 200-day here in the HEDJ. The DAX is down another 4.5% since. So, if you're blindly buying the bid, buying a dip, at least know that the spiders is just at the 200-day. So it'd be nice if we could close below it and see a 3 to 4% move lower versus just continue to play around with it, because we like to have continuity and, follow through is king. And as of right now, we're a little bit off that low. So, see what happens in the next hour or so. And that's it. You have to have a plan, and then you have to work your plan, and you have to have a few plans, because you got to figure out which one the market's going to confirm. And at this point, tactically is the way to go, and just make sure you know your levels, you know what means things in this market, and there are indicators to watch for that. Have a good rest of the day. I'm not going to have a video at the close, but I will be talking on the VTF, and maybe I'll attach a chart or two later. Have a good one.